Welcome to the Imperium Forex daily video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you very much for joining me. Well, it would seem that the market overnight for silver did stage a firm recovery from that level of $16.1520. However, not enough to support it to regain further momentum to the upside. It is concerning though, with the gold outlook breaking down slightly, we could see the silver price mirroring that price action. Now a break beneath $16.1520 would bring in a target of $15.85. So it could be time now to start unwinding some long positions and just be on the lookout that we are breaking down and we could see a short-term sell-off before staging a firmer recovery and looking back up towards that $16.55 to $16.90. Moving on to gold, the price action overnight retreats from the 1,259 resistance and now questions whether a short-term top has been printed after the recent high of 1,258. If the market has reverted back to a bearish sentiment, in the next 24 hours could see further weakness, with the immediate support now being challenged at 47 and beneath here looks towards 1,244 and reassess from there. Although the bulls are now on the back foot since the overnight retreat, it is viewed that a bullish comeback should emerge from 1,244 and stage a bounce back to re-challenge that level of 1,259. However, with the doji, it is a little bit concerning that the market has found a slight indecision in challenging this level of 12.59, and only a break beneath 1,244 would give further concerns to the downside and see a move towards the target of 1,236 to 38 before drawing any bullish conclusions. Well, the Australian dollar is still in a decisive pattern, although it is viewed from the quality of the technical studies that they are slightly reducing to a potential bearish setup, which could see the market not expecting this move, with a down play to 85, with the base now likely to be building from 78.50 and could see short-term recovery from there if challenged. Today we have the figures on the CPI, and the RBA will be watching very closely to this after we saw Deputy Governor Guy Debelle's speech last Friday, who hosed down the hawkish comments from the recent RBA minutes. Later today we have the RBA Governor Phil Lowe, who will be speaking on the labour market and monetary policy. It will be interesting to see if he also plays down the hawkish minutes that was released last week, as the RBA is not looking for a firmer Aussie beyond 80 cents. So it is expected to see fresh supply towards 79.55 if challenged. Well, the euro went straight for the top side overnight at 117.15 and clearly rejected that level after printing a high of 117.12. Also to note that the US dollar index did recover from a 13-month low of 93.46 and is now back above that 94 handle, which could give some hope that the US dollar is recovering. However, we do have tonight the Federal Reserve to announce its monetary monthly policy decision, and with the likely outlook to remain unchanged at 1.25%, although the market will be focusing on the rate statement, which will be released after the decision. The market will analyse the minutes and be looking if the Fed is leaning to a more dovish stance, which could weaken the US dollar. So it's a little bit cautious in the fact that if we do see the market break down for the euro, it needs to get beneath 116.15 and then look towards 115.30.40. However, that being said, if we do, in the unlikelihood, see a break above the 117.15 level, then this would project a target of 119. So do play a little bit of caution to that top side with the event risk coming into tonight. But overall, the technicals are overbought, and from the overnight rejection last night, could be some guidance for a further move down. And talking of guidance, well, the bulls come back very firmly yesterday after the market posted a long-legged doji from 110.50 in front of that level there. From the strong rally overnight, now looks towards 112.40 as an objective. Be a little bit cautious from that level, purely for the fact is that the market may stage a retreat from there. But overall, I'd still expect to see further bullish implications growing, as you can see here from the indicators on a daily basis, are supporting this move up. What would turn this around is a break beneath 111.15, as this would negate any upside movement and instead look back towards 110.5. Well, this time around, it was the Great British Pound overnight who posted a long-legged doji after the market clearly retreated from a high of 130.84. Now, it is viewed that the pattern indicates that price trade well above and below the session's open levels, but closes virtually even to the open. In theory, the long-legged doji acts as indecision amongst the market traders. Therefore, the near-term direction has paused to the bullish case. It is viewed, though, that the market will remain on the Brexit jitters and that the Prime Minister Theresa May's fragile government would attempt to negotiate with the European Union, although it is expected the EU will show no interest in providing any support to Britain as the divorce proceedings continue. So therefore, I expect to see further weakness to the pound, and any attempts, as you can see, are failing clearly. So I'll be looking for a target of 129.65 with the objective coming in at 128.60.70. So that wraps up my daily video. Thank you very much for joining me, and I hope you have a wonderful day that's ahead of us.